Another highly requested stock on the channel is actually 3M. This is a pretty popular company and is trading around 2013 type of level. I mean, the stock got, decimated. It's down over 57, 58% from its highs. So in this video, we're going to take another look at 3M stock, try to determine if this is actually the buying opportunity of a lifetime, if we should be buying whenever there's blood on the street and everyone is selling 3M, or if we should maybe be a little bit more conservative and wait for a better price, as maybe 3M, even though it's down 58%, maybe it has another 20-30% down to go. This is what I'm gonna cover in today's video. So again, I hope you enjoy it. Now, before I get into why 3M is down, and one of the reasons is with the margin, with the macroeconomic, it's slowing down the business, but the main and the biggest headwind on the company is actually their earplugs lawsuit, which I believe many of you are familiar with the lawsuit. They have around 200,000 lawsuits from veterans around, the earplugs, which cause them a lot of problems and health issue, which is again very, very sad. But Bloomberg estimates that 3M may be forced to pay out at least $82 billion according to this complaint. Now, 3M, the entire company is like $65 billion. It's not an $82 even billion company or a $100 billion company. So this is pretty much is going to, bankrupt the company. Although I don't believe it's going to go bankrupt, but it's going to have $82 billion, worth of loan on its balance sheet, and it's going to be, it's going to drag on the stock price, the dividend might get cut, and it's going to be a pretty bad outcome. And this is the reason why the stock keeps going down, because they don't even know how much 3M is going to have to pay. Maybe it's 82 billion, maybe it's 10 billion, maybe it's only 2 billion, maybe it's 50 billion, so we don't know. And the market hates uncertainty, and whenever you have high uncertainty around a certain subject, just like we had the Chinese stocks before and they made a big rebound, whenever you have big uncertainty around a subject, this is where the stock market freaks out. And then at least whenever the whole thing settles down, at least we know how much 3M is liable for. If it's 10 billion or 50 billion, then that would somehow help the stock price, in my personal opinion. But 3M tried to do many tricks to try to avoid this. First of all, they tried to bankrupt their division of the healthcare type of sector to try to get away from the penalties and stuff, because it's a bankrupt company. But again, the judge did not like it at all, and he said 3M deserves a hardship penalty for its bad faith attempt to transfer the liability to a bankrupt unit. So this trick did not work out with 3M. And now what they're trying to do is they're trying to spin it out in a different type of company and just hold a small stake in it to try some liability, which I'm not sure if it's going to work or not. But this is serious stuff, especially as they are messing with the veterans. So again, it's a pretty complicated situation, and I don't believe 3M can pull out some type of trick to actually just get out and pay nothing. But this is not the first time this actually happens with big corporations. It happened many times before, especially with the tobacco type of stocks. And one of the most popular ones, which most of you are familiar for, is actually the BP, Deepwater Horizon cost, whenever they had this whole thing in the ocean spill, and it cost them pretty close to 65 billion. And the total cost, I believe, was even closer to 75 billion. So this actually does happen, from time to time, but it's not pretty. But companies can overcome, and BP is not bankrupt. But if we look at the stock price of BP, this happened in 2010, and BP is still pretty much 50% lower than what it was in 2010. So those things really do weight on the stock price. Now, I'm not trying to compare BP to 3M, because BP had its own management issues. It's a commodity stock, so it's a totally different space than where 3M actually is. But the point I'm trying to make is this is not something that's out of the normal. This actually happened many times with such big corporations, especially the tobacco companies like Philip Morris, British American Tobacco, and all of those companies eventually overcame. But the question is, at what cost? Now, taking a deeper look at their Q4 2022, the cash flow and the balance sheet, they made a massive $1.7 billion of free cash flow, which was again pretty amazing. But the main reason it was that high was because inventories are starting to come down. Inventories were piling up as we had a pretty big slowdown with the macroeconomics and stuff, and now it started to come down, which is eventually going to benefit 3M on their free cash flow level. Now, many people that are interested in 3M are actually dividend investors. They like the stability and the long-lasting dividend of 3M, and 3M has also been growing the dividend. So we're going to assess the stability of the dividend here very soon, but 3M's dividend yield is now pretty close to 5.5%, and this is its highest dividend yield since all I have the data is from the 2008 financial crisis. So it's the highest dividend yield in pretty much 14 or 15 years, which is again shows you that the company is pretty much undervalued. There's a lot of fear around it, and this is the only way you could get a 5.5% dividend with a company like 3M. But a big concern with 3M for now is actually the debt, because they do have some debt. But I don't believe the debt is a big worry, because 3M is a cash flowing machine. Most of the debt is pretty much fixed as 2.9% fixed interest rate, which is again not bad at all. They do have some floating around 5.7%, but again nothing is crazy. Most of them are locked in at 2.9%. So I don't believe the interest is high at all on those loans, especially where interest rates are. And a lot of the debt actually matures after 2027. Some of it matures before, but they do have, again, free cash flows. They have some cash position on the balance sheet. So I'm not worried about the debt in the short term, but after 2027, they have 8.7 billion. And hopefully by 2027, 3M is a much better company than what it actually is right now. Now, looking at their 2023 outlook, again, is pretty bad. A lot of it had to do with macroeconomic challenges and stuff, and they expect, 0 to negative 3%, decline in their sales. Their EPS per share is between $8.50 and $9. The analyst estimates were around 10 EPS per share, but now it's between $8.50 to $9, which is again a pretty big challenges. A lot of it, they said, had to do with something exiting Russia and FX and divestitures and a couple of other things, but it's $8.50 to $9 in total. And again, a lot of it, they said, had to do with macroeconomic challenges. But now China is reopening, and this should boost a little bit of the demand. So I would not be surprised if actually 3M actually ends up on the higher end of its EPS estimate of around $9 per share. But now looking at the dividend, because many of you, again, invest for the dividend. Now the yearly dividend for 3M is actually around $6, looking at next year, $6 per share. And now 3M is expecting their EPS to be between $8.50 to $9. So again, the dividend is very well covered with 3M, assuming 2023 might be the worst year for 3M, and maybe later on they can get back to $10 EPS and stuff. But here's the trick. If the lawsuit actually does come along, and let's say 3M has to borrow $50 billion, the interest expense is going to eat pretty much everything up, and then 3M have to cut the dividend, which is going to be very bad for dividend investors. But as long as the lawsuits, proceeds are below 10 billion or 5 to 10 billion, I don't believe the dividend is going to be cut. But if it's something huge, the interest expense is going to be huge on 3M, especially with current interest rates. So it's really going to hurt their business, in my personal opinion, and they're going to have to cut the dividend, which is bad news for investors. Now, taking the midpoint of around between $8.50 to $9 of EPS, now 3M is trading around 12 times earnings. And this is, again, one of the lowest valuations it had since the 2008 financial crisis. And 3M traded as a mean of 17 times earnings, and now it's trading at 12 times earnings. So you're getting a 5.5% dividend, and whenever this whole recession is over in 2023, if 3M can just get back to the mean of 17 times earnings with the dividend, this is pretty amazing upside on this company. So outside of the lawsuit, assuming the lawsuit, is something small, 5 to 10 billion or even a couple $billion, 3M is going to be an amazing investment at such prices, especially with the dividend and just a reversion to the mean in terms of the valuation. But now, if the lawsuit is actually, 50 to 100 billion dollars, something pretty huge, in my opinion, 3M stock hasn't bottomed, if this is the case. So it's a very high risk, high reward type of, situation, because I cannot see any, phase where whatever 3M has to pay, $50 billion and then the stock goes up on this news. I would be very shocked, because they're going to have to cut the dividend, and this is really going to weigh on many, again, dividend investors and a lot of funds that hold 3M. So it's going to be very, very ugly if the lawsuit is, 50, 60, $85 billion. But if it's something, I believe, $10 billion of under, 3M can actually somehow, manage that, and at least that would help the stock price immensely, because now there's no more uncertainty of how much the market and participants actually know how much 3M has to pay, and the stock could get priced on accordingly, and the uncertainty that I talked about would be, over. Now, for me personally, I am not buying 3M at those prices because I'm an individual stock picker and I can personally find better investments out there with equal, risk to reward type of scenarios. But if you want to buy 3M at those prices, you are betting that the lawsuit will be pretty much under $10 billion, or it's going to be something very, very small. And again, the risk reward is tremendous and you're going to lock in a 5.5% dividend. But if this doesn't happen, which I believe is likely going to be a pretty high settlement because they're messing with veterans, and this is something that judges take very, very seriously, especially when you have a big corporation, like 3M, then I believe 3M stock actually hasn't bottomed and it could stay stagnant for years and years to come. So I'm choosing to stay on the sideline with 3M, but if you're buying 3M here, you have to be prepared to dollar cost average down if it goes down 20 to 30%, because it could easily go to $70 or $60 per share if we do get $85 billion on the lawsuit, although it's unlikely, but again, it could still happen. So if I had to buy 3M at those prices, I would only open a small position and be prepared to dollar cost average down no matter what. But I'm personally choosing to stay on the sideline and keep 3M on my watch list until the lawsuit actually settles down. If 3M gets too cheap to ignore, then I'm gonna jump in and buy the company. If not, then I'm happy to miss on the opportunity. So thank you for watching this video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.